Hello and welcome to What the Tech from Boast, where we talk with some of the brilliant minds behind new and exciting tech initiatives to learn what it takes to tackle technological uncertainty and eventually change the world. I'm Paul Davenport, Boast's resident tech journalist, and today I'm thrilled to welcome Varun Sehgal, CPA and founding partner of Think Accounting. Varun's journey in the accounting world began at Ernst Young, where he cut his teeth in audit before moving into industry roles. But in 2016, he made the leap that would define his career, leaving corporate life to build Think Accounting with his business partners. What started as a traditional, location based Greater Toronto Area firm underwent a dramatic transformation around 2017 and 2018 when Varun and his team made a decisive shift to the cloud. That pivot changed everything. By going paperless and virtual, Think Accounting broke free from geographic constraints and expanded from serving the Greater Toronto Area to working with clients coast to coast across Canada. Today, Think Accounting delivers accounting, bookkeeping, tax services, and increasingly sophisticated tax advisory, M&A advisory, and fractional CFO work across Canada. What makes Varun's firm particularly interesting is how their tech-forward approach naturally attracted innovation-driven clients in SaaS, medical technology, and e-commerce, exactly the types of companies most likely to benefit from R&D tax credits like Shred. These clients don't just tolerate remote work and cloud-based processes, they prefer them. It's an incredible journey through the innovation ecosystem, and I can't wait to pick Varun's brain on his path so far, what's ahead for Think Accounting. Without further ado, welcome to the show, Varun.
Thanks, Paul. Looking forward to it. Thanks for the introduction.
Oh, no, I'm so happy to hear about it. So I know I just gave you a little bit of an intro and a little bit of a spiel, but I'd love to hear in your words, how did you get into the space to begin with? And how did you get into, I know it's maybe not the sexiest path, but accounting and bookkeeping, and then next level accounting and bookkeeping for innovative businesses?
Yeah, in some ways, it was a mix of a few things. If I go back, this is the 10th year. So as you said, 2016. So entering my 10th year of leaving corporate. Now, if I go back, I remember, I was in a corporate job, and which was all great. Working for a large TSX listed company, the perks were good. But what prompted, even on my end, to go into the public accounting space, honestly, was entrepreneurship driven. And then, I figured that's the only thing I know is accounting. But couple other things around that were there were other pioneers in this cloud accounting space who had kind of laid some of that path for people like us to aspire to show that accounting can be done virtually, remotely in the cloud, and also a bit like you said, the accounting in itself isn't looked at as a sexy path, but remote accounting did. It appealed to me. The digital movement that was there, I would say in early 2010s, mid 2010s, it's started bringing things together for me to take the leap and try something new.
I love it. That's very simpatico with how Boast has evolved too. Again, we started back in 2011. We were a little earlier than some people in this space, but to your point, I don't know how much we expected that the remote world would really take on, but the efficiencies that are driven by being a remote business like that and being able to be cloud-based, being flexible, it gives us superpowers and it makes it so that we're able to work and meet our clients where they're at. So I can only imagine that the kind of innovative clients that are moving at a fast pace that your team is working with as well really appreciates just that agility that you get by being more cloud-based, being less beholden to the paperwork and being less beholden to the actual physical spaces. So that is awesome. I'd love to know too, just to recap some of what we said, you made the strategic decision to go fully cloud-based in the late 2010s, and it changed your business model. So what were some of the challenges in making that transformation?
The challenges were, as you mentioned as well, we didn't, in a way, call it start from scratch as a cloud firm. So, a couple of my business partners had already gotten started with a location-based regional firm, like it was the norm back then, and the journey to the cloud happened over 2017, 2018, almost into 2019. The challenges were many different conversations with clients who were used to paper-based, who were used to paying annually, who were used to, not worrying about software and, things on our end now in the cloud space are per client and payroll is per employee base. So a lot of discussions around pricing models, a lot of discussions around, hey, we don't need to meet every time as much as would love to meet you as and when needed, but everything doesn't need an in-person meeting. And so explaining the value a little bit more that we're able to add to the client. And then also on our end, it opened up the talent pool for us where we weren't beholden to talent pool that's within 5, 10, 20 kilometers from our office, but we could hire anywhere. So once we were, fully on board, I think it took a lot of commitment from our entire team as well. It's not something that was taken lightly, because if you're kind of in two minds, then that's a recipe for disaster where you just, it ends pretty badly. So I think it took a strong vision and commitment from everybody, all the partners, all the team members, to believe that it can be done. It's not going to be easy. And we kept pushing through, and ultimately, I would say that part of it, probably by 2018, 2019, we got there. And another, you can say, challenge, you can look at it as this way, that we realized and clients realized that we happily parted ways, where some clients said, that's fine, you go in your direction, whichever, your business sees fit, and we'll go in a different direction. Equally, we had to say no to some clients. But obviously, once that clarity was there, we attracted more of the clients, like you said, who didn't just tolerate this model, but preferred it, right? Preferred the online collaboration. And these industries, SaaS technology, medical technology, e-commerce, for them, they don't want to drive, 30, 60 minutes to their accountant's office. These were the industries who, in that digital movement, were the first industries to hire offshore with contractors, with people across Canada as well. So for them, they looked at firms like us as another plug and play model into their ecosystem, where the finance function for a very long time in their journey can be this virtual model that we can plug into our operations. We don't need to build a large corporate accounting team. So things evolved over time. They weren't easy. It took time. But for us, I think as a team, we did a pretty good job of getting there.
I love it. There's a few points I want to pull up from that were really interesting in what you just said there. First off, when you were even just talking about the nature of the businesses, some of them didn't want to come along for the ride.
Right.
I hate to even say digital transformation because it's so used and abused, and it's also buzzword from
Yeah,
5, 10 years ago. It's not what we're talking about now with SaaS and AI,
that's right.
but it is a transformation though, and it is disruptive. And I think it ties back to what you were saying about entrepreneurship too, and how sure what you know and what your skill set is in that accounting space, and is in making sure that all the bookkeeping and all the actual financials, that's where your superpower can come in. And then being an entrepreneur, building a business and a solution that is unique and really solves those problems. Sometimes again, those early evangelists, if they don't want to come around and move with the times or see where your new north star is, as an entrepreneur, you gotta cut those ties, and I think
Yes.
that's really, really I wanted to say that to the audience out here too. If it's not working, it's not working, and don't move away from your vision if you are confident in your vision and what the value is gonna be for a new market, maybe, if you're moving on from that, so love to see that. I also love too, you were talking about the kinds of businesses that really appreciate this, and I'd love to dig in a little bit more, just
Yeah.
about the sorts of innovative businesses that you're working with, and then also how that ecosystem plays into how they're building their business, because I think that ties into what Boast's strengths are, what Think's strengths are, and where we kind of need to go, because we're an ecosystem. And I think we're giving teams that maybe don't have the expertise in-house the ability to scale and grow without overextending their resources or overextending their focus. And the most innovative businesses need those ecosystem partners. So I'd love to. I know that was a very multi-pronged question, but
Mm.
tell me a little bit about the innovative businesses and those industries and why this ecosystem approach is beneficial for them.
Yeah, even if we go to the origin of these, let's call them startups. We can plug them into this one term called startups. They start out nimble. They focus on what is the MVP, what is the solution they're building for their end customers, and along the way they build on top of that. They are the hub, and the spokes get added along the way, and they recognize that in smaller, nimbler teams like us, in the sense that they see that, okay, while I focus on this part of the things, I don't need, before I hire a full accounting department, let me get a fractional CFO on board. Before I go to the most expensive tax firm in the country. Let me get some good tax advisory, and so on, so forth. They're the industries that use contractors a lot. So the ecosystem approach, and now I'll flip it to firms like us, how we also look at it in many ways to today. We've added a few new functions along the way, which I know you mentioned as well. We can get more into that, but we look at it as that way as well. That where we could we hire a full-time valuations person? Perhaps we could. But along the way, so far, our model is to pull in a CBV into the file as our clients need. Let's talk about R&D. A larger firm model can be we're going to have an in-house R&D department, and we're going to do all this work in-house where we have recognized, and so far our business model supports to plug and play firms like Boast into the file, because we cannot be expert in every industry. You guys have experts to do technical write-ups for software and medicine and manufacturing and so on. And for us, we want to be that ultimate advisor to the client, that you're doing some innovative work, you're experimenting. Let's have a conversation with Boast if this is shred eligible. So on and so forth. The approach here is not to become an expert in everything imaginable. Pick your core areas that you want to focus on, build on, train your team accordingly, hire accordingly. But for everything else, build a network, whether that's shred, lawyers, valuation, M&A, and so on. To be again, goes back to, can we be that hub for the client, and they know that they can rely on us as the advisor to help them bring this expertise on the table, even if we don't have everything in house.
I love how you put that. And you answered what was about to be my next question about how kind of the interplay between a solution like Think that does that broader, like, book of business accounting, and then a partner like Boast, which is really just for companies that are only doing R&D. If you're not doing that technological uncertainty uncovering in your R&D or in your product development, it's a non-starter for Shred, or it's a non-starter for R&D tax credits. But to your point too, your expertise over there is making sure that the finances are in order in the broadest sense to actually help the businesses scale and grow. Whereas again, our solution, you need to know that very specific niche technological jargon that the researchers and developers are focused on, as
Right.
well as translating that to a finance audience. And again, it takes those ecosystems. It's that hub and spoke that you were talking about. You guys are actually where the wheel's getting spun, but we're helping fuel in, hey, non-dilutive funding from the government. We can speak that language of the developers. We're not pulling them away from their projects because we kind of get the gist based off all the data that we had. And then we want to make sure that we're working with the accounting teams like you guys so that this funding is hitting at the right time, so that it's actually getting claimed extensively and across the entitlement that these businesses deserve, because they've made the investments already. And again, it's a recoup on them taking the risks to do the R&D, which if you don't have that backstop, they might not ever engage in the R&D in the first place. So it's really cool that we can kind of play on both sides of this. And I love that you talked about, again, the larger ecosystem and how Boast complements a service and a platform like Think.
Yeah, and I'd say it's just a customer first approach to say what is best for the customer. We don't want to, have an offering where we know we're not the best option out there, and when we can set up an ecosystem like that, at the end of the day, the customer wins, and they can be part of this ecosystem for longer and happier.
Yep, exactly. Okay, so now on this next one, I want to just talk a little bit more about Think Accounting and the evolution, because again, you've evolved from traditional accounting, bookkeeping, and tax compliant work into more strategic services, which again includes that tax advisory, the M&A advisory, and even fractional CFO work. Could you just tell me a little bit about these expanding product lines and just basically how you guys function as, I think the fractional side is really what I'm most curious about.
Okay.
Dig into that for me a little bit, just so that we can make it clear what businesses get when they bring on some fractional advisory work. And that goes above and beyond even just, we have our partner here in the ecosystem who's helping us with our accounting and bookkeeping.
Yeah, sure. Um, it's been an evolution. It's been a journey because if you think about it this way, when we first started on this journey, we were a basic accounting offering, and sure, from paper-based to cloud-based. Along the way, as our client base grew, a subset of those clients came on board or evolved from our existing client base whose needs were more than just getting their books and taxes done. They wanted more advice. They wanted more tax planning. They were buying or selling businesses. And so, over time, we took it slow and steady. And in some ways, that's been part of our fabric is to build slow and steady, where once we recognized that there is this growing need, we started adding those functions. And we started with 2 to 3 areas, with tax advisory, M&A advisory, and then fractional CFO work. Now, to your question about fractional CFO work, it goes back to, in some ways, it started out as business modeling, cash flow modeling, cash flow advisory, because clients went through a big roller coaster, as we all know, over the last 5, 6 years, starting with pre-COVID, COVID, post-COVID. Many industries saw a huge spike and then a huge decline and then a little bit of a plateau. And while some of the industries like SaaS, like e-commerce, enjoyed some really, really good growth in those early years, the management of that growth or then decline and then steadiness required a very close knit collaboration with them. And so once we recognized that need, we started building out those solutions around KPIs, tracking, monthly dashboards, cash flow model / budget for the year, and ongoing monthly or quarterly discussions with those clients. How are you doing actual versus target? And in some ways, a parallel would be like a personal trainer in the gym, whereby some people know what to do, but you just need somebody to just give you a nudge along the way, have that accountability partner correct you along the way. And so that's the way we look at that service, as again goes back to that hub where the fractional CFO service looks at the business holistically after the books and taxes are done, but it looks forward. It doesn't focus on just the history of what happened, but where do we go from here? Where do you want to get to? It goes back to the founders and business owners being very clear on why are they in business, right? Some are building to go public, some are building to sell, some are building to live a lifestyle of 20, 30 hours a week. But I mean, I'm happy making a couple 100,000, but I don't want to burn out. So understanding that those goals, setting those KPIs, and tying it back to the business model has been the driver of that side of work. We made the investment to bring a dedicated manager on board about a couple of years ago for that service, and that's done well for us. And we know that service is not for everyone, but for the businesses for whom that service is there, we see that they get a lot of value. And the biggest value is not the flashiest spreadsheet. It's the heart-to-heart conversation and ongoing conversation on a very regular basis, with the business owner and the fractional CFO team.
I'm going to go back to that personal trainer analogy
Yeah.
that you made too, because I think that really puts a good bow on all of it, because it's not the same thing. It's not off the shelf. We're going to plug in this CFO to do XYZ for you guys. It's listening, like you said, having those heart to heart conversations, understanding what the founder's mission was in the first place, what the goals for the company are, and also just what unique paths are going to be necessary, and bringing that intelligence. It's not one size fits all. You guys are, again, getting personal with it. And it's really making sure that the teams can take something with them after the fractional period ends, but get that foundation in place. So I love that analogy. Just want to really bring that one home. Now, I know I'm jumping back a little bit, but I did want to get back into just kind of, again, the innovative businesses that you work with and the
Mhm.
shred of it all, just because I'd be remiss. We're Boast, we're the shred guys. So
Yeah.
I'd love to know, when you're working with clients, are there any like red lights or green lights when it comes to identifying, oh, they'd be good for shred? Knowing that, again, you guys aren't necessarily the shred experts, because it's a very, I don't want to say we're niche, but it is not something that guy focused in finance can just bone up on very, very technical R&D jargon in a day. But how do you guys identify the innovative companies that are candidates for a business like Boast?
I would say for new clients, it starts all the way from onboarding, because that's where we make it a process that is pretty robust to have a longer discovery call, an intake process with a prospective client to really understand their business model, if it's an existing business, a bit of history, and even if they have not been, let's say, getting shred before that, that's the whole discovery process. Just understanding if they're developing, of course, the low hanging fruit, if they're writing any code, if they are experimenting with any of their manufacturing processes, and so on. So it starts all the way from onboarding. But beyond that, and so let's say onboarding, if there is such an avenue where they may be eligible, the next step is not for us to go deeper into that. The next step is to say, hey, if you haven't looked into it, you may be eligible. Let's introduce you to Boast to have that no obligation, initial call. For existing clients, this is where the way we have built our firm is not once a year transactional. We'll do your year end. Majority of our clients are, our service offering is monthly or quarterly, for bookkeeping, tax advisory, GST, HST, and so on. And the way we've built our team and trained the managers, and then there's that culture of continuous learning as well. Those conversations are happening because they're happening throughout the year. Those flags, the green flags, let's say, in that sense of experimenting, building something new, etc., the team will point it to the client themselves that if you're not looking at it, there may be something here. Red flags, again, we don't want. It's better to err on the side of caution to say that because there's no downside to having an initial chat, we don't want to rule somebody out too soon. But at the same time, like, good example today being, if somebody's just connecting Claude with their software, that's not R&D. Those solutions exist out there. So basic education of, are you building something new here, or are you building two existing technologies but trying to build something that is totally new, that moves the world forward, moves technology forward, moves Canada forward? Yes, let's look at it.
You took the words right out of my mouth. Yeah, I think people know, or at least they're learning, and there's been enough education, hopefully, at this point. But an AI wrapper is not a new solution. If you're
Right.
using Claude or if you're using OpenAI and just putting your branding on it or
Yep.
adding it to their back end, that's probably helpful, but it's not
Right.
unique R&D. You're not
Right.
tackling technological uncertainty, you're taking something off the shelf. So I love that I love that you shouted that out for me without me even having to say it. So,
Okay.
Varun, before I go into outros, I'd love to hear just 2 for business owners listening, because that's really who I
Mhm.
want to benefit here. What are questions they should be asking their accountant regarding funding and regarding just whether it's R&D tax credits or anything that's going to get them growth in 2026,
Mm.
knowing that it is a rocky environment right now? Again, I'm based in the States.
Right.
I don't want to get into the geopolitics of it all, but it has been very unpredictable and it's been very tough to kind of make plans beyond a quarter. But
Right.
any just broad-based advice that you would give to business owners out there who are trying to achieve growth in 2026, from your perch in the accounting space?
Yeah, and of course, I'll speak to Canada specific. And I think one
Yeah.
one thing I'll say is Canada, because of everything that's going on in geopolitics, has a very strong incentive and desire to build in Canada now, right? And I know it's not come up in the chat yet, but as we've seen in the most recent budget as well, with the expenditure limit being doubled from 3 million to 6 million, capital expenditures being included, which last time was more than 10 years ago. Um, all that means is there is more innovation out there, or the ability to get the grants and credits for that innovation out there that maybe previously were not available. Previously, maybe um, Shred almost got synced or synonymized with software development, which, as we know, that's not the case. But capex inclusion is huge for physical experimentation. Industries that were maybe losing out or not even thinking about it because it's not there, was too far distant in the memory. Construction, real estate, food and beverage, physical technology. Those expenditures that were cost of the business are now going to be eligible for shred, right? Um, and caps that were there have been lifted. more. And so for Canadian businesses, it just means it helps with your cash flow so much more to build in Canada, to innovate in Canada, where that's, if we take Ontario as an example, we're touching almost in half of that spending coming back to you in refundable and non-refundable Ontario credits, and 35% per CCPCs. So all in combined, we're approaching 50%, which is humongous. In a way, I'll also tie it back to our fractional CFO work, where we can help the client tie that cash flow cycle from, sure, you have to fund it initially. And let's, even while we're talking about that, talk about non-dilutive funding in the form of IRAP and other grants. And even if more needed, that's where debt can be looked at as a viable solution, to say we're looking for something that is going to be spent in human resources and physical things, and then year end is going to be done, and then Boast is going to file, and then we're going to get that, reasonably predicting that we will get that funding or credit from the government, which can of course then go back to, let's say, paying off that debt or reinvesting into the business. So what I'd say is just open the conversation. There's this, like, we're having this conversation. There's no bad questions. Bring it up, and it sometimes it's about what I'm doing. Is it eligible? And sometimes it is, what could I be doing that may be eligible to innovate. Right. And if I know going in that I'm 50, 60 cents on the dollar out of my pocket, and that the rest is essentially Canada investing in your business indirectly or directly, that maybe changes the mindset that, oh, I was thinking I've got to spend this much, but after this expected credit, if my risk is limited, and that risk can be further limited if you have access to other non-dilutive funding or debt and so on, then it changes the mindset that, okay, you know what, I've got my downside covered. Now let's go for the upside.
Again, you phrased it better than I even could have. I think asking, acknowledging too that there have been significant changes to a lot of programs. I know we've talked a lot on the show about the shred enhancements, like you said, the double actual what you can claim even today, the capex of it all is huge. And I'm just going to call back to too. I think there's a misconception that it is primarily for SaaS, just because
Right.
that had been the buzzword, that had been the jargon in the space. And even some people in SaaS think, oh, R&D is lab coats. No, it's not necessarily
Right.
even lab coats. With the program expansion at the federal level, it's a cash windfall for new industries who probably have a misconception and don't realize that they could be funding up to 50%, like you said, on their actual product development investments, and beyond even just salaries, which is what it used to primarily be.
Right.
Um, and even beyond shred, though, like, across the board, a lot of new provincial budgets dropped, a lot of new funding programs. So whether they're tax credits that you claim after you've already made the investments, whether, like you even said, IRAP, you get the grant and then you can actually embark on the R&D. There's many ways you can kind of slice and dice and make sure that you're getting funding from the government that not only extends your runway and gives you more cash and capital to actually be operational, it's validation that you're doing something worth the investment from the
Yeah.
government, or that you're tackling that technological uncertainty. The government will vet your claim. And when you get shred, it's not just free capital, it is a gold star that you are doing something that is tackling something that new and could be game changing. So if you're getting investors, they want to see that you're claiming shred, if
Yes.
because it tells them that you're doing something innovative and this could be worth their investment on the long term. So
One more quick misconception that's good to get out of the way for the audience is, sometimes we think shred eligibility only means if you succeed. You don't have to. Of course, everybody wants that, call it experiment, to work, and technological uncertainty to be addressed, and the business moves forward. But being shred eligible and getting the grant could mean you tried building something, you tried the experiment, you tried moving the industry forward, your technology forward. For whatever unfortunate reason, it did not work. That doesn't mean you're not now eligible for shred. Just the fact that you are addressing the technological uncertainty, it could be successful, it could be unsuccessful. The shred funding is not contingent on so-called success at the end of that experiment.
absolutely. I'm so glad you shouted that out too, just because even if you didn't bring something and made a product out of it at the end of the day, if you followed the scientific process, if you had your hypotheses, you documented everything, that's not money out the window.
Right.
claim shit on that. You
Right.
did your due diligence, you did everything right, and you came to a conclusion. Sure, it didn't come out to a product, but you did R&D and you took on the risk of exploring all that. So get that funding that you're entitled to because it's there for exactly that. And now somebody else doesn't have to do it. So the government wants to make sure that you backstopped your risk for
Yeah.
taking that. So claim it. And then take your learnings. Again, it's failed experiments, failed R&D, their learnings, and then it's gonna eventually lead to a success down the line, even if this go round didn't bear fruit. Great point, Varun. All right, well, Varun, I can't thank you enough for joining us. This has been an absolute pleasure, and I hope that we can connect soon in person next time I'm up north. I should be in Ontario sometime soon, so I'll keep you in touch with my calendars and my buddy M Fun on our partnerships team, but this was a total pleasure. I can't thank you enough for joining us on What the Tech.
Thanks for having me, Paul.